This morning, Nifty bulls have the license to roam despite a hotter than expected US annual CPI inflation at 8.2% in September. Ugly US inflation dashes hopes that Fed will slow rate rises. The biggest headwind, a hotter than expected US annual CPI inflation at 8.2% in September, compared to the market expectation of 8.1%. The core CPI rose to 6.6% on a yearly basis from 6.3% in August. This big question this Friday morning, is everyone looking at CPI through the wrong lens? The biggest hope, investors may be betting that the stronger than expected inflation report means price increases will peak soon. Palmabulls argue that inflation, and from here we start to cool off. Our view, the Federal Reserve will press with its aggressive tightening plans, probably another 75 basis point hike on 2nd November FOMC meet quite likely. Bottom line, expect volatility to be the hallmark and most probably wild swings quite likely until the inflation genie is back into the bottle. For the day, buying on dips shall be the preferred strategy. Global cues are positive. FIIs in yesterday's trade sold shares worth Rs 1,636 crores. DIIs bought shares worth Rs 753 crores. Fando data suggests Nifty's range of 16,500 to 18,000 zone. India VIX is at 20.29 levels. Nifty PCR is at 1.11. Bank Nifty PCR is at 0.94. Market breadth for the day likely to be positive. Sentiment for the day likely to be precarious. Nifty's technicals is suggesting a consolidation. Outlook for the day, Nifty end a roller coaster session higher. Nifty CMP 17,014. Nifty's biggest support seen at 16,941 mark. Biggest Nifty hurdles at 17,247 mark. Nifty's range for the day is seen between 16,750 to 17,150 zone. Bias for the day is positive. Bank Nifty, CMP 38,624. Bank Nifty support seen at 38,150 levels. Major resistance at 39,257 zone. Bank Nifty range for the day at 38,200 to 39,300 zone. Bias for the day is positive. Overnight, Wall Street, after sinking to new lows for the year, erased the pessimism and, most importantly, shrugged off a hotter than expected inflation result. Yields on US Treasury debt were spiking following the release of disappointing inflation data. The US 2-year 10-year yield curve remained inverted at around 50 basis points, a key recession warning. The benchmark 2-year Treasury spiked to 4.41% and the benchmark 10-year Treasury was pegged at 3.19%. Technically speaking, the immediate downside support for Nifty now seen at 16,747. Only below 16,747, expect waterfall of selling. Please note, invalidation of bearish trend only if Nifty moves above its biggest hurdles at the 17,429 mark.